What's up, everybody? It's your boy KC2 Real, man. And we're back with another Talkin Stock Tuesdays, man. I made for everybody that's in the Discord, I'm making this video. I'm gonna just put this one on YouTube because a lot of people couldn't make it and things of that nature. For the Zoom call tonight. So I'm gonna make this video, I'm gonna put it up on YouTube, and I will be dropping the link for y'all so y'all can just watch it on your own time. All right, so let's get into it, man. I know, as you can see by the background screen, this has pretty much been the overall sentiment of the market. It's been going down. People have been worried. Trump has been talking tariffs. All these type of things have been going on. People worried about Elon Musk and Doge. People worried about all these wars. People worried about China. So there's a lot going on. It's so much going on. I couldn't even tell you. But that's what's creating the volatility, and that's what's creating the sell-offs, right? So we've seen a lot of stocks drop, especially tech stocks. We've seen a lot of indices drop. So let's get into it all. Okay. So first, what's behind the recent market sell-off, right? So the first thing is we got trade tensions and tariffs, right? Trump has been talking tariffs. He's been scaring everybody, and people just do not like that word. Okay, so President Trump's aggressive tariff policies have heightened fears of an economic slowdown, leading to increased market volatility, right? So that is what is going on with this tariff situation. A lot of people are worried about, is the cost of everything gonna go up? Inflation is gonna be bad. People ain't gonna be able to afford things. It might cause a major recession, which are all my fears as well. But that's another thing for another day, right? So yes, that is the reason that a lot of volatility is going on in the market. Hedge funds are selling off. We're gonna talk about that. But yeah. So the second thing is recession and stagflation concerns, right? So investors are anxious about a potential recession coupled with rising inflation, a dreaded stagflation scenario exacerbated by ongoing trade disputes. So that basically just means they're worried about inflation being bad and a potential recession at the same time, which is basically what I just said, right? So tech sector turmoil. Major tech stocks, including Tesla and Alphabet, have experienced significant declines, contributing to a broader market loss, right? So, yes, I took a hit myself personally in Google. I was in Google, which is Alphabet. I took a personal hit myself with that. But yeah, it's been bad for tech stocks right now. A lot of them are going down. Tesla is dropping for a different reason. Well, it is related to that as well, but he has more around him that the reason why his take is so crazy. But we're going to talk about that too. Okay, so Federal Reserve uncertainty. Anticipation of the Federal Reserve upcoming decisions on interest rates adds to market instability as investors seek clarity on future monetary policy, right? And then we got 5, which is investor sentiment and behavior. The recent sell-off has been influenced by investor psychology, right? So let's go. Hedge funds raise recession probabilities, right? So what that means is a lot of hedge funds are talking. They're raising their probability meters of a recession coming, which means these are like the top economists and traders in the world. They manage billions of dollars, maybe even $1 trillion. So we have to really take into account that if they're really worried about a recession, how fearful we should be, right, as regular people, right? So if you got billions of dollars and you worried, I should be worried. You know what I'm saying? So, but banks can't survive without us, right? That's why they're worried. But anyways, so hedge funds are signaling increased recession fears. aggressively de-risking their portfolios at the fastest pace since 2021. Major funds are exiting industrial stocks and increasing short positions, betting on a potential economic downturn, right? So, what are your key signals? Record sell-off. Hedge funds are dumping stocks at accelerated rates, especially in industrial sectors. If you've seen what Warren Buffett has been doing, he's been dumping a lot of stock and keeping a cash reserve. Increased short positions. Traders are placing billions in bearish bets against U.S. equities, preparing for a decline. I think I read somewhere that it was the most short positions put in since 2023. Come in here. Since 2023. So, fight to safety. Defensive maneuvers suggest growing uncertainty about economic stability, right? So, what this means for investors, you got to stay cautious. Elevated risk signals mean investors should be prepared for market volatility. Diversify wisely. Consider fewer cyclical sectors and safe haven assets like gold, bonds, or defensive stocks. And monitor key indicators. Watch for Fed policy updates, earning reports, and economic data shift, right? So, recessions. We as investors should be the ones to be optimists, right? Because at the end of the day, our money is on the line. I know recession sounds very, very scary, and it is gonna be bad, and it may hurt. But at the end of the day, people come out of these type of situations richer, right? The people who have access to the information and have access to get into position to set up for times like this when the market is down, um, that is the time when you need to really, really, really get in, right? So, um, market uncertainty equals opportunity, right? Recessions aren't just downturns; they're gateways to wealth creation if you play it right. Historically, 16 out of 31 U.S. recessions saw positive stock returns, proving that smart investors thrive in economic downturns, right? So that's the overall sentiment that I'm trying to get to everybody. Um, there's ways to make money in a down market. There's ways to make money in an up market. But the point is, when we go through these type of situations, you have to stay optimistic about what can come out on the other side after, right? New lows equal new highs, and it just goes that way, right? So, how to invest during uncertain times? Diversify your portfolio, focus on defensive sectors, invest in dividend stocks, buy alternative assets. We've already talked about all of that. But the main thing I want you to get out of this, and which goes along with what I just said, is Warren Buffett advice, right? um, One of the greatest traders in the world. Be fearful when others are greedy, and greedy when others are fearful. The best time to buy undervalued assets is when fear dominates the market. Um, Focus on strong fundamentals. Quality businesses at discounted prices lead to massive long-term gains. If you don't want to listen to me, I advise you to listen to Warren Buffett, right? So the takeaway is recessions create millionaires and billionaires if you're strategic and patient. History proves that those who invest wisely in tough times reap the rewards later. Right. So stay positive, make your strategy tight, keep your strategy and practice it over and over and over again, and tweak it until you get it how you like it and whatever works for you. Because in these times when things are down, you can really make a lot of money. All right, so let's talk about some news real quick, and then we'll get into the options 101. Um, and then we'll talk about some other things at the end. So first things first, Tesla's downfall, right? Um, Decline, competition, and controversy, right? So Tesla has plummeted over 50% since December 2024, marking one of its worst downturns. The decline is driven by intensifying competition, analyst downgrades, and Elon Musk political and personal controversies, right? So market competition is heating up. He has new tech coming out of China that is kicking his ass in his secondary market, which is China, which is his second largest market besides us. So he's getting his ass whooped in that. Um, so he's losing ground to rivals in China and Europe, struggling to maintain dominance. Wall Street analysts are turning bearish on him. RBC Capital cuts price target lower by 27% to 320. Oppenheimer lowers revenue projections, cut to 97.9 billion. And you got to keep in mind, this is after Trump gave him some billions too. So Musk political and personal controversies, right? So we already know he's getting killed on every end, right? Basically, falls that too. But he's basically losing on business front, personal front, and political front. So he's really getting hit with the triple whammy. So, but yeah, we all know about his personal controversies that's been going on with him. Things with Doge, the company, the thing he's running with firing federal workers and getting rid of Medicaid and things of that nature that he's trying to do. So a lot of people are really, really, really not liking that. So it's negatively affecting his stock, right? Also, we all know the Nazi salute he did, well, the Roman salute, I should say. But yeah, so we all know what's going on. So that's what's going on with Tesla. So optimist wise, I love this for Netflix, right? UFC is really, really pushing to get on Netflix. So UFC's 1.5 billion ESPN deal is expiring, and then Netflix is emerging as a top contender to take over broadcasting rights. Netflix has been aggressively expanding into live sports, securing deals for WWE and the Jake Paul versus Mike Tyson fight. If successful, this deal could shift UFC from pay-per-view model to a subscription-based format, driving more engagement and subscribers to Netflix, right? So I love Netflix as a stock. That's actually one of my stock picks that I'm gonna give for y'all tonight. But yes, I love Netflix stock. I said it back when they first did the Mike Tyson fight. They have been killing it ever since. WWE Monday Night Raw is on there. I actually watch Monday Night Raw myself, so I know for a fact that people have been watching it. Their arenas are always filled in the WWE, so I know for a fact they're making a lot of money, and a lot of people are tuning in on Monday nights to watch that. And they're also going to tune in if they get this deal. That's going to be big for Netflix because that's going to be something that's steady that they can play all the time. They don't gotta really stretch it out between like seasons and stuff like that. So it's gonna be nice for them. I love Netflix stock though. It's definitely worth buying. More subscribers and engagement equals revenue growth, strengthens Netflix live sports dominance, expands content leadership beyond scripted TV and film, right? So what are the concerns? So I'm gonna give y'all both sides. I gave y'all the good. Now I'm gonna give y'all what are the concerns, right? So this is for you to make your own decision and come up with your own thesis, right? So high licensing costs is that's one thing that I told y'all about. Remember when I was talking to y'all about the Jake Paul versus Mike Tyson fight? I said that the only worry I have about Netflix doing these live events is they have to pay so much to put on the event that I know that's going to start eating into their model, and then they're going to keep trying to raise their subscriptions, and eventually people are going to be like, this is too much. I got other options for subscriptions. And if they lose subscriptions, then that's going to be bad for them. So they're going to have to figure out how to manage being able to host these events and still be able to keep their revenue. So that's one thing that I had called early when I saw that Mike Tyson fight. But anyways, and they got a transition from pay-per-view could reduce UFC's per event revenue, right? So that could be bad for UFC. And then regulatory hurdles with existing ESPN deal. And we also have to worry about it. Can Netflix even have the type of shit? You know what I'm saying? Maybe, but I don't know. All right. So, anyways, gold hits another all-time high. Gold has been going crazy. I mean, the last couple of years, but the U.S. debt has been going crazy. I remember I told y'all that the gold directly correlated with the United States debt, right? So as the debt rises, the gold rises, right? So it just is what it is. I don't know why, but there's been a positive correlation for years. I showed y'all the data, so I don't argue with history and I don't argue with facts. So, anyways, gold has officially surpassed $3,000 per ounce, reaching an all-time high of 3,038. So investors are pouring into gold as global uncertainty, inflation, and market volatility drive demand for safe haven assets, right? So basically, people are worried about what's going on in the world. A lot of economic stuff is fucked up right now, and not just in America, also in Europe and things of that nature. So Europe is having a lot of economic troubles too. So it's not just America; it's other countries as well. So yeah, they are buying stuff that they know is going to work for them because they're worried about what's going on in the world. So let me give y'all my stock picks. These are my personal stock picks. You do not have to fuck with these. You know what I'm saying? Please do your own research. I ain't telling you to buy. You got to do your own research, but this is what I'm looking at to buy, right? These are the stocks that I'm watching as the market has been going down and these opportunities have been popping up, right? So Netflix, streaming growth plus price hikes, more revenue. I love Netflix. I told y'all Netflix is one of my favorite. App loving. That is one of the ones that I've been looking at recently. They're a company that sells solutions to apps, helps companies manage their apps better. Apple, Meta, and Nvidia. Those are my stocks that I love. I definitely am. The only one I'm really kind of worried about a little bit is Meta, but I love Nvidia. I know Nvidia's been flat for a while, and I know y'all been probably like, "Damn, Nvidia hasn't even moved." He keep talking about Nvidia, but it's never going nowhere. Trust me, Nvidia for the long term is one of those stocks that you want to be in. It's undeniable. Their use case. And also, speaking of today, March 18th, 2025, Jensen Hung just gave his GTC keynote. He just threw an event today where he announced the Blackwell and Rubin chips and all types of stuff and new tech and stuff that he's working on. So I guarantee you after today, well, I ain't gonna say I guarantee you, but I bet you after today, the stock is gonna be up because this is what the market has been waiting to hear. And also he's coming back from that DeepSeek thing that crashed his stock. Remember when DeepSeek crashed Nvidia? Yeah, so he's gonna be trying to get his get back for that. Anyways, these are two sleeper stocks, right? So these are stocks that are in the cut that I'm really like I'm watching them out my periphery. I'm not watching them as hard as I'm watching those other stocks I just told you about, but I'm watching them like out of my periphery. You know what I mean? So these are two McDonald's. I actually love McDonald's stock. You really can't go wrong with it. I mean, we all know how much people eat McDonald's, right? And McDonald's is everywhere in the world. So, the only worry about McDonald's is more like people moving more towards healthy food. So fast food kind of taking a hit, but I definitely love McDonald's as a stock. That's why it's one of my sleepers. And they're also supposed to be opening 9,000 plus new locations worldwide, right? So Intel is my other sleeper stock, right? So that is another company that they make GPUs and things of that nature. They recently got a new CEO, and he gave a lot of changes that he's gonna make in the company. Lip Bhutan, I don't want to say his name wrong. I hope that's how you say it, but yeah. So he's the new. He can shake things up, help them compete better with AMD and Nvidia. And if they drop something new, man, I mean, they can really take off because of how cheap the price is right now. I can see a lot of investors rallying behind it because it's a cheaper option. Oh, so we'll see. But those are my sleeper stocks. So I'm not telling y'all to watch these because these are just my sleepers, right? So, but definitely do your own research on all of those I just said. So, options trading 101, right? So let's get to it. I want y'all to really understand how option trading works so you can be better at it. Okay. So, what is option trading, right? Options let you control stock moves without owning the stock, right? So instead of buying the shares, you're buying the contracts that help you profit from the price changes in either direction. So you have two types of options. Well, there's more. There's actually more types, but for beginners, I would just stick with these two. So you got a call option, which means you make money when the stock goes up, and you got a put option, which means you make money when the stock goes down. Okay, so let's go over some key things that you need to know first. So when you go to buy an option, the strike price is what you would consider. That's the price that you're expecting the stock to move to. So the strike price is the price you're betting the stock will move above or below before the contract expires. Example: if you buy $100 call on Apple, you need Apple's price to go above 100 to start making money, right? So that's why it's called the strike price. So this is not on here, but what I want to tell you is a premium. A premium is the price that you actually pay to buy the option. So when you buy an option, you pay a premium to own the contract, right? So that's not on here, but I want you to understand that's another key term you need to know. Premium, right? So what is your break-even price? The price where your trade starts profiting after considering the cost, which is the premium I just told you about, of the option. So basically what your break-even price is, that means, yes, you bought the call for 100 and you're expecting the stock to go above 100 until you start making money. But you also have to cost in the premium price. So when you buy it, it's your strike price plus your premium paid. So when you have a call, it's your strike price plus premium paid. And when you have a put, it's your strike price minus premium paid. So example is if you pay $5 for $100 call, your break even is $100 plus 5, which is 105. So your break even price is the price that you have to get past to start making profit. So it's not just you have to get past 100, you have to get past your break even price. That's what a lot of people don't tell you. It's not just that you have to get above 100, which is your strike price. You also have to get above the break even price. So just keep that in mind when you buy your option. Okay, so you almost have to be expecting it to go past your strike price to hit that break even price so you can really start making money on your option. Okay, so this is probably the most important this is one of the two most important things you need to understand. Expiration time. Time is money. So when you pick an option, you're picking it based on the day, or how many days until that contract expires. So it goes in different day intervals. Sometimes it's 0 day, which means it ends at the end of the trade session. You got like 6 day, a week. You got 7 days, so you got a week. You got 14 days, which is 2 weeks. Sometimes you got 2-3 month option calls out. You can plan them out kind of pretty far, right? Sometimes you can even do like a year out, right? So the point is, what is your expiration, right? Why does this matter? Every option has an end date when it either makes you money or expires worthless. So if you don't make what you're trying to make on your option, it will expire worthless. And what's going to happen is the premium that you paid is going to be lost, right? You're not going to get that money back. So the more time you have, the more expensive the option, but it gives the trade room to work. So options are kind of expensive up front. It's especially if you get far out options, they get more expensive because you're basically holding the price. You know what I'm saying? You're holding an option price. So it is more expensive, but sometimes you can find ones. You got to be a hunter. If you a hunter, you can find ones for good prices, right? Like Apple, you can find a good option for like $200, $150, right? So it's not too crazy, but it'll be depending on how much the stock you're buying price is at the time. That's how you know how expensive the option most likely is going to be. So if your stock is like Netflix, where it's at $900 already, your options are going to be really, really expensive. But Apple is at like 2 something, so it's less expensive, right? So just keep that in mind. Like Palantir is at 80 something dollars, so their options aren't that expensive. So all right, just keep that in mind. But anyways, so how to pick your expiration dates, right? Short term is 1 week to 1 month. That's high risk, but it can flip money fast. Theta decay is high. So I'm gonna talk to you about what theta is and beta in a second. So medium term is 1 to 3 months. Give stock time to move, but not too expensive. Long term leaps is 6 months to years. Expensive, but safer for big moves, right? All right. So if you're buying, give yourself time, 1 to 2 months minimum. If you're selling options short term, it's better to collect premiums, right? I don't always do 1 to 2 months. I would say at least do 2 weeks though. I never do less than 2 weeks if I do an option personally, but if you want to do it, that's on you. I mean, hey, do your own research, but I personally don't like to do anything under 2-week options. All right, so this is the second most important thing. I told you that was the first one. This is the second most important thing you need to know. You have to know this if you're going to trade options. This is, and I'm not going to lie to you, this is the thing that had me mostly stuck when I was learning options. This is the thing that had me the most confused, right? So the beta and the theta. So I'm going to explain to you what this is, but you have to kind of just remember and like, have it in your mental somewhere. So the beta, how wild is the ride, right? So this measures how much a stock moves compared to the market. So what does that mean? High beta is over 1, more volatile, and low beta is less than 1, right? More stable. So how do you use this when you're buying an option, right? Why do you look at this? High beta stocks, big gains fast, but also big losses, right? So theta, the silent killer, which is time decay. Remember I told you about them expiration dates. This is where your expiration date comes in. So the reason that your expiration date is important is because your option contract is losing value the closer it gets to your expiration date. Now, how fast is it losing value? depends on your theta. So your theta is your time decay, which is telling you how much money you're losing per day until your option is over with, right? Or it might not tell you per day, but you can calculate how much you losing per day on your option contract, which is why you want the stock to move kind of quick when you put the option in. If you're doing it far out, it doesn't really matter as much because your theta is going to be really low because you bought it so far out. But if you're doing like 2 weeks, a week, anything like that, options, your theta is most likely going to be higher, which means you need to really pay attention to how fast you're losing value because you might end up not making shit for real, right? So higher theta means you're faster decay. If buying options, avoid short expirations. Theta eats your value. If selling options short term is better, right? Theta is your friend. So, what's the final game plan? Pick the right strike price, balance risk and reward, understand the break even. So, like I said, don't just think that the strike price is what you have to get past. Make sure you know where your break even is. It should tell, like on Webull, I know it tells you, but you can calculate your break even also. And you need to make sure you know what that is so you know exactly how much your stock has to move to get past your break even. And then give yourself time. Expiration dates matter. So you want to give yourself enough time because your stock is losing value, which is to watch the beta and theta. Use volatility and time decay to your advantage. And paper trade first, man. Always paper trade first to make sure you know what you're doing before you lose a lot of money. And do your own research, man. Don't just listen to me. Please do your own research. So now that I've gave you what options is, for the setup to look for stocks, this is just a free setup that you can use. Use it, don't use it. That's on you, but it is on my YouTube channel as well, which this will be as well. So this is the link. So yeah, this is my swing trade strategy. It tells you exactly how I view to get into my swing trades. I also use this formula for options. So yes, this is what I use. All right. All right. So the last thing I want to talk to y'all about is AI powered trading, right? Please, please, please use AI to help your trading strategy, help you build your strategy up. I use it myself because the thing about AI is you can personalize it. You can tell them how much exactly is in your account without having to feel embarrassed or whatever about it. You can talk to people about if you're new, you ain't got to worry about saying, oh, well, I only got, $25 to do it with, can you help me? Like AI will take that money or whatever you got and they will tailor your experience literally to help you personally, right? Which is basically the same thing, somebody in finance would do if you went to them, a financial advisor or whatever. I'm not saying don't consult a financial advisor and just use AI. I mean, if you want a financial advisor, do that too. But I'm just saying AI can definitely help you fine tune your trading, right? So why struggle when AI can help? Develop a personal trading plan can be overwhelming, but AI platforms make it faster, smarter, and more efficient. The AI advantage in trading: data-driven insights, speed and accuracy, emotion-free decisions, customizable strategies, and risk management. How AI can build your personalized trading plan? It can help you find the best stocks, optimize entry and exit points, balance your portfolio in real-time alerts and analysis, right? So trade smarter, not harder. With AI, you're never trading alone. Get real-time insights, automated strategies, and risk control at your fingertips. Use AI to maximize profit and minimize your mistakes, right? So please do that. It's worth it. I promise you. I do it myself. It helps so much. I mean, you can literally screenshot your Webull chart and tell AI to analyze it, and it will give you everything, your support levels, everything. So I love using it. So it's definitely up my trading game. So that's just some free game for y'all. But that is the end of the video. I hope y'all found this helpful. As always, you can just hit me up. If you just seeing this video on YouTube and you're not in my stock club, I will put the link to the Discord and the stock club in the description. And also, we will be back on Zoom next week. And I hope everybody has a good one. Peace.